Hello, good morning, good afternoon, good evening. You're welcome to this week's Forex review with Great White FX for the 11th to 15th of September 2023. So as always, we're going to start off with the economic calendar. So looking at the economic calendar, we can basically see that Wednesday and Thursday, it's going to be very interesting. We have CPI on Wednesday for USD. We have GDP for British pound on Wednesday, 7 a.m. on Wednesday. Then we have employment change and unemployment rate on Thursday for the Aussie dollar. Then rate news for the euro on that same Thursday. And some core PPI, some high impact news. So Wednesday, Thursday is going to be really interesting for the US dollar. So that out of the way, as always, we're going to start off our forecast with NASDAQ US 100. Well, we're going to start off this week with a little tweet. So we're going to look at what we had in view
Always,
for
we're
last
going to
week.
start with
The US 100. We're going to look at what the market did last week and what it has done so far this week. So that gives us an idea of what we're going to expect. So looking at the US 100 from the weekly, this has kind of like a bullish order flow. Long term to medium term, the order flow is still bullish. If we drop down to the daily, we can see that price rallied up into this bearish order block on the daily. And this volume imbalance here, there's a volume imbalance here. Price rejected from it. So if we go down to the 4-hour time frame, what are we looking this week? We already have a swing here on the 4-hour. Let's go down to the 1 hour. So looking at the 1 hour, we already have what looks like a breaker. So a retracement may be seen because we already have a swing here on the 1 hour. We already have a swing. So a retracement may be seen. If you go to your lower time frame, say your 15-minute time frame, you're going to see the imbalances here that price may retrace up into. Then if price is to continue lower, we'll be watching this fair value gap on the daily here. Let's go back to daily so that we can see. So looking back, we can see that basically, if we look at the 1 hour, this was where we were somewhere here last week. Let me see. Okay. Okay. This was where we were last week. And this was a retracement and price has broken lower. So if we go into this new week, we can clearly see that if we look at price on the weekly, we have always like a bearish setup here. A bearish setup. If we drop to the daily time frame, already price has gone below this fair value gap here, and there's already a fair value gap. So price is went deep into this fair value gap and bounced. If we drop down to the 4-hour time frame, on this pair, we can see that order flow on this pair is now to the downside. Order flow on the US 100 is the downside. So this week, what are we probably going to be expecting? We're probably going to be expecting lower prices. But first and foremost, like I always say, this may retrace into this area here. This may retrace into this 4-hour volume imbalance. We might see a bit of a retracement into it. As if you look at it here, if you put in your annotations, we might see a bit of a retracement higher and then coming into this previous week low first. Price is going to sweep into this previous week's low first. That's first target. If the downside starts, then the next target is going to be this 4-hour imbalance. And if you notice, this 4-hour imbalance is lining up with this fair value gap here. So if price rallies up into here and gets rejected, then your first target is going to be 15,207, then 15,134, that's previous week's low. Then there's a 4-hour fair value gap here. This 4-hour fair value gap will be your next draw on price. So the next we're going to look at is the dollar index. Let's see what dollar index is like. The dollar index for now still has a bullish bias, but it's at a critical level. This area here, the last time price came there, price dropped. So price is at that area now. So going into the new week, the possibility that a retracement may be seen into this fair value gap. There's a possibility that we may see a retracement into this fair value gap. As you can see, it has acted as a kind of resistance before. So if price comes in here, finds support, then we might see a continuation to the upside on the dollar index. So the next so if we go to the dollar index, I think that basically played out, but the price didn't drop to this fair value gap here. So it just didn't drop to the fair value gap like as I was saying. It didn't drop. This was that fair value gap I was thinking price might drop into. So it took us. So where price is now, price is at the volume imbalance on the daily. Let me remove everything. So this volume imbalance here, this open price, this close price here to this open price, you see there's a gap here. And if you notice, when price ran into that place, if I pull back my annotations, you see that's where price ran into. Pull back, then close back up again. Other flow going into this new week is still bullish. Other flow going into this new week is still bullish. But what I would want to see first is a bit of a retracement. And if price is going to retrace, a bit, we have this swing low, any of these lows, or this here as a possible retracement. That is if price doesn't rally first. If price doesn't rally first, because if this is to continue higher, I'll prefer it retraces a bit, then goes higher. But if price rallies, then we might be seeing it running for this next volume imbalance. That's at 105.27. So for the dollar index, this is still basically bullish. So any retracement might be an opportunity to fill up any imbalance. We have possible lows here. And as we know, we have high impact news. We have high impact news on the dollar index for Wednesday and Thursday. So it may start weak and then rally up into here, going into Wednesday, Thursday. So the dollar index is still bullish for now. The next pair we're going to be looking at is the Euro USD. The Euro USD order flow on this pair is still to the downside. It's still to the downside, but it wasn't the best of price delivery. It wasn't the best of price delivery. Order flow is still to the downside on this pair. But where price is now, if we go to the monthly, price is at this rejection block here, this close price. This close price here, that's where price is, and it has bounced. You know, this is a monthly time frame. So going into this new week, the possibility exists that we might see a retracement first. The possibility exists that we might see a bit of a retracement. after that retracement, then we might see a lower move in price. Hello, can you guys still hear me? Can you still hear me and see my screen?
Yes.
Okay. So you might still see a little bit of a rally on this, then a continuation back to the downside on this pair. So going into the new week, what I'll prefer is a little bit of a rally, then a move lower on this pair. As you can see, the price delivery last week wasn't very smooth. That is because the EURGBP had strength. So this didn't move. To be clearer, when we move to the pound GBPUSD. So looking at the GBPUSD, GBPUSD is still bearish. As you can see, other flow on this pair is still tilting to the downside. If we go to the weekly, I'll say price is within this bearish order block. That's where we have price on the weekly. If we go down to the daily, the price is within this structure point here. Go back everything within this structure point. So going into this new week, I'll prefer to see a little bit of a corrective rally. I don't want to see it sweep this low. I want to see it first rally into this area here, into this 4-hour fair value gap here. And if it rallies into this 4-hour fair value gap here, the consequent encroachment of this is almost equal to the daily fair value gap. That's where the daily fair value gap lines up. That's almost there. So I prefer to see a retracement here, then a rejection lower. Then if price rejects lower, your first target is going to be 24.45. Then after that, we have 23.91. So for the GBPUSD, price is still tilted to the downside. The next one we're going to look at is gold. So looking at gold, let's look at gold, what we had on gold for last week. Looking at gold, let's go into the gold. If we look at it long term, it seems to be slightly moving on the downside. If we go to the daily time frame, and see that short term, we have a correction of this move down. And if you place your fib from this high to this low, price is at the 61.8, which also has this daily bearish order block here. And second, price has rejected there. We don't have a swing yet on the daily, but on the 4-hour, we already have a swing and what looks like a kind of a breaker. So going into the new week, the possibility exists that this may retrace. If it does not go above 1953, then we'll be seeing price come into this area first. If this other block fails, then we might see price come down here. But so let's look at gold. So gold basically played out like we anticipated last week. There was that retracement, rejection from this area, and price is now within this bullish order block on the 4-hour time frame. We're looking at price now. If we look at price, let me go up to the daily. You won't see the range on the daily. The range is on the 4-hour time frame. It's on the 4-hour time frame. Weekly has closed what you might call a dark cloud cover as a bearish pattern. You can see that this bearish candle closed more than 3/4 of the previous bullish candle. If we go into the daily, price is sitting within this bullish order block. But if we go into the 4-hour time frame, you can basically see that this is tilting to the downside. This order block has not been broken yet. But on the 4-hour, we have a range. Now, if you notice, on Friday, when price rallied, it got to that range and got rejected there. So now, looking at this, going into this new week, if this is to continue to the downside, I'll prefer it to rally first. I prefer to see a rally first, then it move back down. As you can see, it didn't close above this range. And why is this a range? Because we have from this high to this low, we had 1, 2, 3, 4, 5. Once you have more than 4 or 5 candles within the body of a major candle, that candle becomes what you call a range candle or a master candle. Then the break above it or below. So this is what you're going to do. From the low to the high, you take this, then you project either to the upside or to the downside. We had a range candle here, 1, 2, 3, 4, 5. So let's look at this range candle here so that you see, so that you have a clear example of what I'm trying to tell you. So you see this range candle. Now, if we project the breakout to the low, you see where price got to. Now we have another range candle here. We have another range candle here. So if price breaks, continues lower, this will be your projected target. You'll be looking at price to come to 1901.66. 1901.66 first. That basically, it will sweep this low and this low. So going into this new week, we prefer to see a correction. And one thing with a range is that you can break it into segments. So when you break it into segments, you put in you look for imbalances within the range. So if we look at this, possibly we'll be expecting to see this is the midpoint of that range. And it lines up with this 1 hour fair value gap. So going into this new week, we want to see a little bit of a retracement to fill this imbalance, then a rejection that will break these lows here and probably move back lower. So going into the new week, gold is still tilted to the downside. So now if we come back to the EURGBP, this EURGBP played out precisely as we anticipated last week. You can watch the review video. I said that we had a breaker this last up candle before this down move, that it's a breaker and that price might most likely come down to it. As you can see, came down to that low, and that was what started the correction. So going into this new week, although if you look at this pair, it seems to be like in a range. And if you notice, throughout Friday, price stayed above this fair value gap. So going into this new week, I'll prefer a retracement first. Then, if price is to continue rallying, this high and this high. But if it rallies first and fills up this area, then we might see a correction. Since we have, I think we have rate news on the euro on Thursday. So most likely this might retrace and rally into this area during the news on Thursday. So for the EURGBP, the EURGBP is still slightly bullish. So with that knowledge, you know that if you have a strong EURGBP, that means euro most likely across board is going to be strong. So if you look at something like the dollar index that is going to be bullish, you'll be best selling GBPUSD instead of EURUSD. So that's what you have to have at the back of your mind. So the next we are going to be looking at is GBPCHF. This pair is just basically in a range. It's not going anywhere for now. This pair is just basically in a range. If you look at it, from the daily, is it the daily or the weekly? Let's look at it from, if we look at it from the weekly, we can basically see that price has been within this candle of 17th since July. And this is a weekly range. 1, 2, 3, 4, 5, 6, 7. 7 candles within one weekly range. So this pair is just basically in a range. So if you're trading it, you just need to be aware of that you're within a very, very big range. So if you're trading it, you need to be aware that you're within a very, very big range. So the next pair we're going to be looking at is the pound yen. So looking at the pound yen, this is still slightly bullish. This is still slightly bullish, but with a it's now in a consolidation. Let's go to the weekly. If we look at the weekly, we have wicks to the upside. So wicks on both sides tells you that there's basically nobody in control. It's more like if you push me, I push you, you push me, I push you. So we're basically in a consolidation, a bullish consolidation, because the order flow on this pair is still tilted to the upside on the daily. But if we go to the 4-hour, sell side liquidity has been swept. All these lows here, price has swept it. So going into this new week, if this bearish order block gets taken, then price might move higher. Because if you look at price on the 4-hour, there's almost not much of an imbalance. If you notice, price was efficiently delivered. Price was just efficiently delivered. If we go to the 1-hour time frame, price has been efficiently delivered. So then the next step on this pair is to see what happens here. If price comes into this structure point here, that is bearish order block, and gets rejected, okay, we might see a little bit of a lower price on this pair. Oh, somebody's writing on my screen. Person writing on my screen, could you please not do that?
I know it is very rude.
Person writing on my screen, not do that. So if this gets rejected here, it might move lower. So that's it for the euro yen. The last but not the least is euro yen. So this pair, basically, as you can see, it's kind of like in a consolidation. I would say it's a bullish consolidation because order flow on this pair is still to the upside. Order flow on this pair is still tilted to the upside. Wicks on both sides tells you that it's in a consolidation. So if we go down to the 4-hour time frame, I still think this pair might still move higher. If it retraces, it will be an opportunity to move higher. So where will this pair be going into this imbalance here? Yeah, as where this pair might be coming into this new week. And if this fails to hold price, then we might see it come up towards this place. But I'll prefer to see a retracement. Any retracement on this pair should be an opportunity for a long going into the new week. Any questions? Any questions or anybody want me to look at before we call it a day?
So the gold is still there in a bearish condition.
Yes, gold is still in a bearish condition, but he's in a range now. So that's why you need to be a little bit careful, like I pointed out. So
Okay.
when a pair goes into a range, you just need to be more, you trade from the edges. Because if you notice on Friday when I gave that trade call, gold buy I gave on Friday was because of this expansion, then this fair value gap here. Let me put it back. Okay, there's a fair value gap here. Let me put the fair value gap here so that you can see it. This is a 4-hour fair value gap. This is an expansion. This expansion broke this high. You wait for the retracement. Then if you go to the 15 minutes, it is clear there. That was why the longs were from here. Then it rallied up to that range. And if you notice, immediately it got there, what happened? It dropped. Order flow is still bearish. The thing with gold is that gold is such a pair that it can give you opportunities on both sides. You can give you a long opportunity, can give you a short opportunity. And you notice immediately it rallied, got into this place, it collapsed. So those are some of the things you need to understand. So going into this new week, I'll prefer to see a rally first. A rally should be an opportunity for a sell, because this pair is still tilted to the downside.
Okay.
So I think that settles it. I wish everybody a lovely weekend and a blessed and beautiful trading week ahead. Good night, everybody.
Good night.